Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the Greedy Trader channel. So in today's video, I am doing something rather different. Now, a lot of people have asked me on the private Discord server, so if you look at the description link below, you should be able to access the server and you can communicate with me. Now, people have asked me, they say they want me to do something on order flow, because again, for those of you who are completely new to the channel, it's the first time you're watching this video, I primarily make all my videos around market profile. As someone who's been in this business for 15 years plus, I have been through everything, right? So I was on the institutional side. I've been largely as well on the retail side, and now I'm kind of somewhere in the middle. Now, I've had the luxury of approaching this business from a professional standpoint. So everything I do on the channel is designed to reflect everything it means to be a professional trader, right? And that's kind of what I want to kind of put out there and, you know, give people what I believe is the way they should be looking at markets. Now, of course, there's so many influencers out there in trading, and sometimes it just makes you sick. But it is what it is, right? We live in a capitalist society, and people will find opportunities, and, you know, feeding people the wrong information is technically one of those. What I tend to do here is focus a lot more on what I know to be the way people who are serious about this business, because sometimes even when you use the word professional quote unquote trader, it sometimes doesn't sound right? But because what we have is two types of people. We got the people who are serious about trading. They want to make it into a business. They want to succeed at it, and there's absolutely nothing wrong. It's just buying and selling stuff at the end of the day. And then you have the group of people who love excitement. It's all just about fun. It's like the casino, right? You go in, you sit at the blackjack table, and you just have fun. It doesn't matter the money you spend, what you lose, it's all parts of the game. And you would see that quite often. It's why we have, you know, Wall Street bets, for example. These things won't exist if there wasn't a certain excitement around destroying capital, right? We live in an era or an age of decadence, and an age of excessive quantitative easing, as we say here in the UK, but rather the simple term is money printing. And we live in an age where the entire world is ruled by the largest, most decadent capitalist nation of all time. So there is a lot of this going about, and obviously this coupled with greed and obviously in some cases extreme poverty has led to a boom in speculation. This is not the first time in human history. Most people, a large portion of people, are speculating. Speculation has been gamified, and what you get is just the simple desire to play a game, and that's what trading has become. It's become a game, and people want to play because it's fun. Now, I take a completely different approach. On this channel, we focus on, okay, imagine you're that person, and of course I bet you, as sure as I breathe, that you're about to click off this YouTube channel right now if you're not that kind of person who wants to seriously learn about trading and investments. In fact, managing assets across the board. Right? If you're not that person, you won't enjoy these videos, I can tell you, because it's not going to be exciting. It's not going to be fun. I'm not going to tell you what you want to hear. I'm not going to show you strategies that you're familiar with. I'm not going to do any of that stuff. what you're going to see me doing is the stuff that is my bread and butter, and that's basically it. There's just nothing else to it, basically. It's not all roses, so again, I won't be putting any rose tinted glasses on. It's just it's harsh, it's brutal, it is business. You got to be a cutthroat about decision making, you got to be quick, and it's good. You've got to be all these things that the influencers tell you don't need to be, right? And you're going to find that this is what we deal with. You're going to have to invest money in tools, you're going to have to invest money in the best platforms. Sadly, you are going to see me use platforms you're familiar with, but then you're also going to see me use platforms that cost me money that you're not familiar with, but they give me an edge, right? You're going to see me use technology that you're thinking, how do I get access to it? That in fact you probably know how to get access to it, but you're probably going to look at the price tag or the requirements on you, and you're going to probably say, I don't really think this is for me. I want to go back to doing, what I see the influencers telling me to do about prop trading, and you're going to want to go back to that stuff. Like, not that, you can't succeed in this or it's bad. You're just going to find it harder, right? Just because you don't want to spend the money on the front end, right? I'm going to talk about stuff. I'm going to, bring terms in that you might not understand, and sadly, genuinely speaking, I won't be able to sort of help you with that, because as I always say, nothing's for free, right? I'm not going to waste my time just giving value for no reason, right? So you're going to experience all of these things when you're in this channel. But anyway, I detracted a little bit. It's just to give you an overview, because I kind of just ran into it, and for people who've seen my videos, then this is just another video. Right, so what I wanted to do today is bring you guys what you've always been asking for, which is a session on tape reading or order flow, or visualizing, how to handle, the tape, in other words. Right, now again, like I said, this will be tools that some of you have access to, or you're willing to get access to, or for some of you, you just won't and you're unwilling, so this is going to be completely useless to you. But for those of you who are, and are considering trading is going to be your business, your lifelong business, then this is definitely for you. So we've got Tesla, right? So I've got a 15-minute candlestick chart of Tesla. Now, one of the things I always say is that we're big on market profile here. We rarely use candlesticks for anything. But when you're intraday trading a stock, you tend to need a view of order flow, and you can't always stick this together on a profile. Now, there are platforms that do that, like Sierra Charts, for example, which I do have access to, but I don't want to cover it on here, because my Sierra chart is kind of programmed up to look a certain way, and then I'll have to explain it all. So it just doesn't make the video will just end up being drawn out. So to avoid that, I've decided to just get the raw data feed from TWS, which is what I use as my tunnel into Sierra. But I just get the raw data feed from TWS, and I just show you the course of a day, and I'll show you how I traded it. I do like using the CFDs, because for those who follow my video, I have a holistic approach to trading. So for example, I look at it from the perspective of income. So I sell premium, which is a steadier income source for me, for example, just because it's a high probability situation. I also trade CFDs. I'm a huge cable trader, but these I swing more. So I look at position data, which, again, if you join this server, you'll see I talk a lot about that, to determine where I want to get in. So I have very few trades a year in these assets. But when I do, they're always pretty much quite solid, and I tend to share some of the stuff that I do. So when I total that all together, I look at getting a P&L over a time set, which is what my profit is, right? So that's how I stay profitable. For me, it's not really about, making all the trades so granular and, trying to do all this risk reward, all that malark. For me, the business is high probability. What part of the market can I get into where there's the highest probability of success, right? Because the markets there's a lot of priced in information, there's a lot of priced in activity. So being profitable, it can be incredibly difficult if you're just a gunslinger. But if you start to think beyond gunslinging, then you start to build a sense of profitability. And that means you're going to be approaching the market from a multi-asset standpoint, and you're going to be looking at different tables. As I like to say, I sit at different tables, and then you're going to decide how much you want to risk at each table. So I trade. So if I'm doing intraday, for example, On the stock side, I'll be trading in the CFDs because I get more bang for my buck and I don't have to lock up as much capital because I need a considerable amount of capital to lock up in order to do my option rights, which is also my bread and butter. So I organize my trading like a business, right? So there are different revenue sections and streams that I'm looking at access revenue, and if one stream is underperforming, I feel that it's not generating what it should be, and I'm not able to find an edge there, then I just walk away because there's no point in continuing. I don't try to find an edge. I just leave the table and go to another table where there's an edge, and that's kind of how I work, and that's what I try and show people how to do this who decide to spend any time with me at all. Okay, so before I detract again, back to this. So this is a recorded session of the tape because I felt this is the best way to do it, and then I can talk you through what I was seeing, why, and sort of the best way you can approach it. So I'm going to make sure that I'm going to play. This is a Tesla, and I'm going to show you the trades that I did and how I did them and why. So I'm going to talk you through, and I'm going to also treat this more like a learning session where I'm going to be able to sort of talk you through some of the important aspects of how this all works and some of the important aspects that you need to know as you go along with it. Now, let's run the simulation. Let's not waste too much time. Right. So there we are. Right. So you can see, and I'm going to sort of pause this as I move along, so you can see the market opened and it's just trading as normal, and then we can see the time and sales window, which is loading essentially all the raw orders that are going through the exchange at the time, and that's what we want to pay particular attention to. So if we just pause this for a second, right, and then we can just run this slider through. Now, one of the first things you notice as we start to trade along is that you start to see a few orders pop up on the screen. So initially you get the opening print, which will load pretty soon, just how the tape runs, and I've kind of filtered this into blocks so you can see exactly what's the biggest orders basically. So I want to be able to see the biggest orders going through. Some people like to see the whole tape, right? But I don't think I have, I'm not that quick with my eyeballs, so a lot of things will get lost. But what I also like to do is monitor the aggressiveness of the blocks as they land onto the tape, so the aggressiveness of orders. So these are all the largest orders traded in blocks, and I want to see those. Right, so the first thing I pick up on is at 233.79. Yeah, 10,600 shares. Now the other thing, that this is a nuance, is that I will always check condition codes. Right, so I want to know what kind of order this is. Is it intermarket sweep? Is this an order which is reserved, like associated with an option trade, for example, because I want to know the degree of market impact I'm going to see as a result of this. I might monitor for other things, so I want to see, what exchange is it from, etc. So they're just things I like to know. It's not everyone's forte, but I like to keep tabs on it. So the first thing I've noticed is we've got 14,000 shares here, 10,600 here, and we got 15,700 somewhere, 233.79, 234.77. So if you look at where we're printing on the tape, we're 234.96 as the last trade, right? So that's telling us that we've got somewhere support around about 233.79 because that's where we saw the biggest order, and then we're seeing orders come in subsequently, and then at 234.90, which is we're 6 cents above that price, we got 15,700. So in actual fact, you're looking at roughly say 24, about 30, roughly just under 40,000 shares that have been traded between these price at the open, right? So it's quite interesting, and obviously you can relate that to what you see in previous days, right? So for me, this is quite significant, right? Like I'm looking at some of the prior opens, this is slightly different behavior from what I've seen, especially at the open. It's quick, people are quick off the mark, right? So something's going down. I don't know what yet, but we can see from market structure that this market has been selling off for a while, so something's going down. For now, as a professional, that's all you want to conclude. Something's going down, you don't know yet, you need a little bit more confirmation, right? So you don't want to rush it. But for now, we're starting to see a slight bullish bias based on what we're seeing. So let's see how this thing translates. So again, we're going to bob around for a bit. So So if we just roll this forward, what we're looking for is we're looking at the tape price. So we want to see orders dropping. So again, you see another print at 234.12. We're trading 235. That's 14,462 shares traded at that price, right? So again, we're still above all the orders. It was traded on the bid, which means that if we've popped up, it was absorbed. So if you're looking at a level 2 price ladder, what you probably would have seen is that there might have been some passive orders stacked at the bid price, and then the ladder came down, hit those orders, and maybe they reloaded, maybe they bounced, and then we're back up again, right? So essentially that became a support level. Now, I don't focus so much on the level 2 when it comes to stocks. I think with futures it's different, because futures is a purer market in my opinion. You're only really buying and selling futures contracts, that's it. With stocks, you could be doing a range of things, right? And obviously that's why I check condition codes, because some of these orders are not what you think they are, right? There's always two sides to the party. There's a buyer and a seller, but some of them are maybe done without market impact, right? So some of these trades are not really going to move the price. Whilst with the futures, it's not quite this case. You know, if there's a big block of futures contracts purchased, then it tends to move the price, unless you're running some kind of spoof on algorithm, which is illegal, by the way. But if you're not doing any of those things, then you are going to see generally market impact from the futures side. But what I find with equities, it's not always the case. So it's just something to bear in mind. But I still want to pay attention to the big orders, and I want to see how the price reacts to it. So I think if you're an equities trader, and some of you guys might agree with me if you trade a lot of intraday equities, that this is a much more of a watching game with equities than I think with futures. There's a lot more determination that goes into a futures trade in terms of direction than maybe an equities trade. So I think with equities, you just have to be a little bit more cautious. All right, so let's roll this forward. So again, we can see that bullish bias is really translating. We're trading 235.74. We haven't seen any other big blocks come in. Yeah, we see something close to 10,000. I like to focus on the 5-figure blocks because that's just what I've observed, that they tend to have the biggest impact. These smaller ones, not really. But we do have something close to 10,000 at 235.61. I look and see, is there anything close enough to this price, just in case someone is getting filled in steps, right? You can also look at the exchange it's coming from. You know, just things that could help you build a more, you know, sort of rounded picture of what's going on. But clearly quite a few block orders coming through now, and we're trading through 235.74. So what we're looking for now is, okay, it's been quite a few, it's nearly about what now, a point to 2 points move. So we expect to start seeing, from a scalper's point of view, people also trying to come in on the short side. So we're sort of looking for that. Right. So we're watching the tape, and then we see 16,100 shares trade at 236.50. Right, so this is a big clip, and it's a little bit on the high side. Most professionals tend to want to buy on the low side. So if I was seeing this at the bids, for example, this came in at the offer. If it come in on the bid and then we bounce, then I would have probably said that that's a really smart buyer. One of the things I could see with my Sierra charts, which I can't show you here, is I can see traders who trade under the bid. I used to ask myself this question. It's like, how the hell do you get to trade a price below the bid? Well, it stands to reason they're going to be people who have unfair advantages, and that's all I can deduce, is that there's an unfair advantage. So someone got a price below the bid. So those orders don't always tend to be very big. Sometimes they're quite a few thousand shares, but they are like slightly smaller clips than normal, but they're traded under the bid, and that's normally a really good indication that someone has deduced this market is going higher, and these orders, in my opinion anyway, from what I've seen, tend to have a lot of market impact. But obviously I can't see these here because I haven't coded this correctly for that. So I'm just focused on the raw data, which is, okay, I can see that we got 16,100, it's a little bit high, so I got to be cautious on that one. Maybe it's going to drop back, maybe it continues going, but I need to see confirmation. So we trade a few ticks off, about 8 cents above that, and then we're down to 36.02. So immediately for me, I've already got my support here. So if we go back to what we're talking about, that 233.79, the open, that's the support. So that's where the main buyers are, in my opinion. And then I want to kind of put a resistance level at 36.50, because I think there's a decent amount of sellers there, right? So a lot of people want to get short of that level. So I know as the session develops, it's going to be a tough level of breach. So again, we trade 8 cents up from that. We start to back up. whoops. Let me see what's happening with my slider. Okay, so let's go back. Oopsie. Okay, so yeah, it's a bit weird. Normally my slider works fine. Ah, there we go, much better. Right, so again, pops up. We're still trading. There we go. Ah, there you go. You see. So right there. So let's pause that for a second. So you can see we've really retreated at this stage. And where we are, 235.91. So clearly that's a defined area for sellers. A couple other things that are going to stand out to you. For example, volume is really starting to peak. Right? We're like what, just 11 minutes from the open, and look where we are. Like something's going on. Like people are really diving into this. So even on the smaller orders, it's all adding up. But more so, we're seeing those big block orders, and now we know we have a big seller at 236.50, and we also have a buyer up there too. So it's kind of a tug of war at this stage. So we want to see if we're going to get a buyer step in again as we start to back up a little lower. Right, and that's kind of what we're looking for. Right, so we're going to keep an eye on the tape, and as you can see at 235.50, right, someone traded the midpoint, right, so that's 12,787 shares, and we've popped to 55. So clearly someone came in, traded into the bid prices, and then off we go again, right? So it's also quite significant now that we've got a willing buyer wanting to stand very close to a seller. So the market's getting a little bit tight, in my opinion. Bids are trading really close to the offers. So if we speed that up, right, so we're the 15 minutes is closed now, and now we want to see what happens next. Right, so we're still, and look, so right here we can see now we got a flurry. So we got 236, we got about what, 10, 20, 29, I give us about 26,000 shares trading, and of course if we look at that, it's about 36,000, give or take, right? 36,000 shares, just under 40,000 shares that have traded between 236 and 236.01, right? So this is actually a really interesting thing that we're seeing, right? And we're now trading 236.27, so it's a big pop, right? So a lot of these came in, a couple traded down into the midpoint, right? So mid price, and then we had a few at the offer. So that's a good indication that the market's getting a little bit aggressive at this point to challenge those 236.50 sellers, right? So my thoughts are there's going to be a fight, and if we pull back, then it becomes a very interesting sort of opportunity to sort of get involved in. So let's see how this plays out. Right, so we hit that 236.50 again, so it's clearly a struggle, right? So the people who are standing at 236, some of these are going to be, they're going to be shorts as well, because remember there's a buyer to every seller, and a seller to every buyer. So essentially this is where the majority of the people who want to short this are standing, which means that if we get over that, we're going to get a breakout, right? And that's kind of thing. So at this stage, we want to start thinking about getting long if we want to preempt this. If we're already long, we need a plan. By this point in the game, right, and I'll show you my position, I was already long, right? So I was already long because I'm anticipating we're going to break out from the activity I've seen earlier, right? Now I need a plan at this stage, right? And this is some of the things that maybe influencers don't talk about. You need a plan because now you're long, the market is dipping back, so you need a plan if the market dips back too far, right? Because if you don't have a plan, what tends to happen is that you're going to do something crazy. So you need to know what you're doing. So for me, I would have to say that 233.79 is the place where I want to change my perspective, right? If we start getting under there, it's a problem. You know, we could just trace some liquidity down here and then move, but to be honest, the behavior this morning tells me if we do go down there, we're going to have a significant problem, in my opinion. So that will be my plan, is to look more at changing direction if we get down there. So if then scenarios, which is what I said, everyone, you want to study if then scenarios. Right, so again, as you can see, we bob around for a little bit and then we put in 234.50, right, and then we bounce 234.87. We traded this at the bid, which tells me that it's probably absorption, right? So we've gone, hit a block, and we've bounced off. We can see all that volume trading at the open, and we still see there's a huge propensity for people to want to buy those bids. So again, so now you see, it. So you can see at 236.59, we pop in, we hit that level again, we see 14,200 shares trade, so some more sellers diving in, and then we see 236, 13,518, and then we pop from that at 11. So every time those shorts come in and push everything back down, they're very quickly picked up again by the buyers. And you see these little white prints. This is similar to what I was talking about, traders who get prices below the bid. So these white prints are more efficient trades, right? And that's what we're seeing at 236. So someone is working 236, right? So you can see that here, and you can see that here. Right? So these little things are like kind of the telltale signs, right? So, and then you can see us here, 14,659 trade at 235.81. And now, if you ask me, I would say that this is now what they want to use to kind of clear those stops, right? So those people who are sitting trying to get short at 36.59, this is where they're in trouble, right? So we traded 235.81 and we're now 236.43. So there's no doubt in my mind that that 59 high level is probably going to break at this point. So if you're not already long, you don't want to be long again. So now is when you start thinking, I should be putting more size on. This is probably going to be a good day, and you need a plan. Right, the next plan will be is that the way we're positioned, if we start to break lower and take out maybe these just below that 234 sort of 50 level, then we're going to have a problem, right? So that's the next plan. So we need another if then scenario in order to manage this trade somewhat through. So again, if we push that, and then we can see at 237.05 we've got 25,000 shares trade, and we're trading 237.38. so for me, this is stop scheme blown. Traders realizing that they need to change direction. This thing's not going short. We're going to have a really strong day. They're really realizing at this stage that all the activity at the open is playing through. So we're seeing now obviously a huge box coming in, and they just want to run this up, right? So from this point now, it's just rest easy, and then you can kind of see what transpires. Oops. So if we sort of run that, yeah, okay, there we go. So you can see very clearly that, you know, even though we're getting slight dips here, that this market is probably going to stay relatively bullish. We haven't seen any big sellers come in at the moment, no huge clips. It just feels steady, so you're feeling very confident at this point. And we see at 238, we see 10,500 shares trade, so probably some sellers, but actually I did check the condition code on that one. It was an option reserve, so I doubt it will have much market impact, right? So, but we are kind of, you know, sort of holding there. We see 13,200 trade at 237.15, and we are trading 238.55. So again, that mirrors an option trade, I would say. So again, that's probably someone else on the option side. So that's why that price is so off kilter. Again, we see us pushing through that quite easily, and you can see we get 10,600 trade again at 238.25, and you see I checked the condition code on that one, as you can see on screen, and that allowed me to kind of see that, okay, that was an actual trade. It's a cash stock trade, and it's not an option trade. Right, so as we sort of push through, we can see there's a fair amount of resistance up there, so I did mark it at 238.19. That's kind of what we want to pay attention to. Again, if you want to trim, it's a good place to do that. In my case, I was prepared to hold a little bit more to get into that pre-market high. And then you can see at 239, we trade 12,000 shares and we're trading 239.25. So we can expect there's going to be significant movement more to the upside. And now I'm thinking about taking profits because we've been cycling here. I just need to see a little bit more of a push up, and I'll show you the trade that I did eventually to kind of reflect that. Right, so again, we push a little higher, and you should be thinking about cutting your trade at this point. So which for me comes about there. Oops, and that's the end of the, let's just go back. Oops. There we go. Oh, that's it. So that's the end of the whole thing. So if I just pop on the screen, right, which is useful, right, so you can see that's my trade there as a CFD. So you can see that entry. So as soon as we popped over that 236, the thing you're going to notice with CFD brokers is they start the open 5 minutes later than you would do if you're looking at the exchange, which is why I prefer to have some of the more professional tools so I can see that even if I'm going to execute on a CFD platform, because the time's out of kilter. So the bars look a little bit different, but there you go. Anyway, so you can see that 236, so you can see my orders come in there, and then as we go you can see that high 239.42, a little bit higher, 239 is close. I think we were close enough to 239, sort of, I don't know, 50 or something, where I eventually covered that trade, right? And that was it. That's my trading day done, right? So I had 2 buys, right? So this was more like buy, add in once we start to get those pops, and then let's see where this goes, cover, end of day, and then obviously any breakdowns from there, you want to probably hit the short side. So if you want to kind of trade this into the, as they say, the for me anyway, the 10 p.m. the 4 p.m. golden hour, as they call it, which is when we sort of get the sort of laggards coming in to play the market. So that's when a lot of traders who don't want to trade the open, that's what they tend to do. And then I just want to wait for that pullback. So again, if there's an opportunity to short a stock like Tesla, there tends to almost always be an opportunity to short, and then you want to get short and then make sure you're covering and getting out as quick as possible. But you got to manage that short trade, especially when you see a day like this where participants are quite aggressive. So hopefully you enjoyed this video, guys. I hope I didn't draw it out too much. This is a very different way to make a video, to kind of talk through an entire sort of trading day that was kind of screen recorded. And it's something I think every trader should do, is they should record their screens, at least so they can go back and review some of the things they do, look at the trades, what did they miss, what changed, what did they probably not pay attention to, and stuff like that. It really helps. And as a professional manager, you're going to find that you're going to be doing this a lot of the time anyway, because you want to get better at what you do. But yeah, so that's kind of how, so this again, that's a great day for P&L that just gets added in. And then that's it basically. So I'm dealing with high probability. So again, someone asked me, why do you day trade stocks as opposed to like Forex or something else? And the simple answer is that stocks just have a higher probability of, you got better volatility during the day. There's a higher chance if you're trading a blue chip that you're going to be successful. I mean, why don't I short small caps, for example? Because I think that business is almost done. I mean, there are just people out there now just waiting to kill small cap traders. Whereas with the blue chips, you're not the biggest fish in the sea, but at the same time, there's no real big fish in the sea. Everyone's a big fish in the blue chip, so you can just jump on a whale. So when reading the tape, it's fairly easy and straightforward. There's not too much, it doesn't feel like there's too much manipulation on the blue chip tapes as opposed to like a small cap. So for me, it's just about doing high probability things of success rather than doing this really difficult route that the influencers want you to do. Hey, trade small caps, join my small cap space, small caps, and short small caps until you get your face ripped off when you go to do a pre-market short. You go to do a short, and then you go for a pre-market short, or you get a pre-market scam, and boom, your bloody face is ripped off. So call a spade a spade. That's kind of where we are with it. So anyway, guys, till my next video, hope you enjoyed this. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?